We want to show you a stock that has good potential for a sizable move in the coming weeks ahead, although it's not quite ready yet, and the stock is WYNN. And you can see on the chart that during the Brexit week it fell strongly into the bottom of the range, and unlike many other stocks has not bounced up back to the top of the range. So there's still potential. But if we look at the point and figure chart and do a count, we can get an idea of what's potentially involved here. But this is a 4-figure box size, 3-box reversal, and we have 1, 2, 3, 4, 5, 6, 7 columns. So let's quickly do the math. 4 times 3 is 12, times 7 is equal to 84. So the point and figure charts are showing the potential for an 84-point move from this bottom. So this is where the breakout occurred. It's about 73. So 84 plus 73 is equal to 157. So we're looking for potentially here WYNN to run back up into the 150s, 157 area, which would be this resistance area up here. So it's only 91 right now, so that's a pretty good potential. We don't think it's there yet, but it has good technical strength. It's a rising cloud, and it's just popping above the cloud. It has not yet gone above the 8-period EMA or the balance lines, and although the Chaikin oscillator is showing some buying interest coming in, the accumulation distribution line has not. So at this precise moment in time, I don't think I would go out and take a long position in WYNN, but I would keep my eye on it for a little pullback and some evidence of accumulation, because we think that it has good potential. But the potential pitfall that we talked about is in the option chain, and we're going to pull that up. And the first thing we did was we sorted by call open interest, just to see how much buying interest there is in this, or trading interest there is in WYNN options. And these numbers look good. We have thousands of open interest contracts in a lot of different cycles or a lot of different months, and we even have 500s into the scroll, so that's pretty good. But the next thing we like to do is click on the strike prices, and we like to go to the current at the money strikes to see what kind of interest we have there, and I apologize for the scroll. But the current price is 91.79, so we're going to look at, say, 91, 92.5, 93 at the different expiration months. We usually like to go out about 45 days, sometimes a little shorter, sometimes a little longer, but say that's the benchmark. So, but we can see that the 34 and 41 day cycles, the 91 strike, the 92 strike, and the 92.5 strike, that there's just no open interest. So it would just be you and the market maker, and that's not a good situation. But you can see the difference in the spread between the bid-ask. The 92.5, 76 days out, has the highest open interest on the column, and we can see between the bid and the ask there's only 20 cents, which isn't a bad spread. But if we look at a 92.5, say in the 34, it's 4.90 to 5.30, so the spread, is 40 cents. That's wider, and that's the case in most other columns where there's a low open interest. So one aspect of liquidity is not only the open interest or the volume, which results in open interest, but the distance between the bid-ask spread, because we always try and buy and sell at the midpoint between the bid-ask. And if there's not a lot of open interest in the contract, or if the bid-ask spread is very wide, it becomes difficult to get your either buy or sell executed at a fair price. So we're going to look at WYNN, and we're going to keep our eye on the option contracts to see if some interest comes in there. And we would like to trade WYNN probably based on the technicals, but based on the option lack of liquidity in the expiration cycles we're interested in, maybe it's not a really great idea.